345 puts, so basically we'll try to pay 120. Well, now it's 123, 126. We'll try to pay 125 for one. One you want to buy?
Good afternoon, traders. Happy Wednesday. This is Jefferson Fosse here with Walsh Trading. Hope you're having a good week. All sorts of fun stuff here to look at. This is my midweek commodity outlook here, just giving a look through all the major markets that I follow. Show you what the charts look here on from my end, what things are I think might happen here in the future, what might happen here as we move forward. Please keep in mind futures trading does involve substantial amounts of risk, certainly not suitable for all investors, traders, or producers. Try to keep this down to about 30 minutes here today, folks. These ones usually run a little bit long. That's about usually what we get here. Hey, if you like this, if you like my content, think it's useful, like, share, subscribe, tell people about it. Be happy to have everybody here on board that can come on board. Starting off here, first off with the fat cattle, live cattle here, December down 560 here today. Short-term averages did flip over to the sell side here with today's trade. You got the 5 and the 10-day cross making a bearish crossover right here. It's tough to see because it's behind that big red candle here from today. But they were on the buy side here starting October 7th, worked their way up. We did set new highs last Thursday, 1 week ago from tomorrow. And then ever since rumors of the Trump administration going to do something to bring down the price of beef, market's been a little bit edgy. We were down 605 here in fats on Friday, a little bit higher Monday, a little bit higher on Tuesday. We gained $1.77 today. Big drop down, 560 lower. Not nearly as big as Friday's move was, but still a pretty substantial move down. This is the lowest we've closed here in about 10 days. Or a week and a half or so, since Friday the 10th was the last time we closed, or maybe the Thursday the 9th. We did hear today that what the Trump administration is planning here to bring down beef prices. One, they're going to import more beef from Argentina. I don't think that's going to matter a whole lot. We produce somewhere right around 500,000 pounds a day here in the U.S. Last year, for all their imports, we imported less than 100 million from Argentina last year. I don't think they have the production to make any significant change to our consumption supply-demand equations. They're also going to encourage more processing plants to be built. I don't know if they're going to do that through grants or if they're just going to try to encourage that type of behavior. But the packers are mostly underwater these days, so I don't know if that's really going to help things either. And they're going to open up some government pastures for more grazing, which I think does help if you live next door to them or within a close distance. But if you don't, well, that's not much help either. So in the long run, I don't think that's going to do much to increase our supply of cattle. This week on Friday, we normally get our cattle on feed report. Don't think we're going to get it here because the government's closed still. And this quarterly report, the October one, would have shown us how many heifers are being retained. We're not going to see that data here this month. Might see it next if they get things reopened, but your guess is as good as mine if the government ever gets reopened. As far as cattle go here, I think we got support at 50-day moving average. That's a 237.50 here, reference the December contract. It held as very good support here when we tested it late September, and earlier here this month held as support when we tested it here in June again. And well, we got through it a little bit here in April. But came right, that was only for what, about 5-6 days that we were under. It came right back up and we were setting new highs again by the middle of May. So I think we're at a pretty decent support level here. Just coming off of contract highs. Market has been overbought here for a little while. You can see the stochastics up there. Certainly in need of a significant correction. We haven't had one in a while, but I think that 50-day moving average should offer strong support. If we break below that, then we're going down to the 100-day, and that's down there around that 227.50 or so area. So we could still have some more downside here in the cattle markets. I think it's going to be temporary if we do. I think until we do something to actually increase our herd size, I'm still going to remain fundamentally bullish here on cattle. But short-term averages all flip to the sell side. Same thing here with feeders. Now, feeders tend to overextend both up and down. Today they were a little down here. 361.02 was where the January contract finished. You can see that blue cross there from the 5 and 10-day moving averages making a bearish crossover here this morning on the open. 50-day moving average support, just like for the fat cattle, has held very well all year long. Didn't really get below it too much here in April. Bounced off it in May. Got close late June, early July. Got close September, the middle of September. Got not as close here in the beginning of October, and then we rallied here again. So I would look for support here in feeders. This is the January contract. That's the front month now as far as open interest and volume go. Look for that to have support here right around that 353 mark. 353.31 is where you've got that 50-day moving average. Looking over to the hog market. Nice little bounce up here yesterday, but the bear trend continues today. Hogs down 87 on the day, closing at 82.40. 5-10-day moving averages here on my chart flip to the sell side here on October 2nd. Market's pretty oversold, and it's been that way, well, pretty much since October 7th. So it is in need of a little bit of a correction of that condition, but the market seems like it wants to head down. Look for support right around that 80.50 area, which is where you've got the 200-day moving average kind of coming up to give us a support level. If we don't quite get, and that also kind of roughly corresponds with the lows that we had here late in July. That low was 80.17. That 200-day moving average is at 80.50. So anywhere between 81 to 80 cents even should be some support here where we might see the hog market bounce from. Looking over here, December corn up 3 1/4 here on the day, closing 4.23. Closing back up above that 100-day moving average here now for the 1, 2, 3, 4th day out of the last 5. I think that's supportive. It's certainly a better performance than we had here in September when we closed up above it here for just a couple of days before crashing back right back down. I shouldn't say crashing. It hadn't fallen that far. But we are starting to hook back up here a little bit. No export sales data, but we do get export inspections, and export inspections that come out every Monday. Corn demand is still very, very good. There's lots of product going out the door. Harvest is probably about 50% done or a little bit more. We don't get any crop progress reports either because the government's closed. But once we get past that 40-50% mark in harvest, usually the lows are in. We set them here, it looks like in August, unless something remarkable happens. How bullish can we get? Well, I think we need to go up and fill this gap here, and that's from July 3rd to July 7th. That's at 432 3/4. Beyond that, 200-day moving average is 437 3/4. Haven't had a whole lot of success except for a very brief period here in April where we did rally up above it, but ran into some trend line resistance right there, pushed the market right back down. I don't know. I think once harvest is complete, I like corn from the long side. I think it typically tends to bounce seasonally this time of year. Also, once the harvest is complete, well, that's all we're going to get. So then we know how much we have. So I do like corn from the long side, but that 100-day moving average is pretty key. That's at 420 3/4. We're not far away from it. 423 here was the close today. Got to get this market up, away from that moving average. Maybe we can get the trend to change here a little bit. The 50-day, the medium-term average that I use, that is starting to hook higher. It's not wildly bullish, but it does have an upward inclination to it here, at least to my eye, while the 100 still has a downward inclination here at the moment. But I do like corn from the long side. January soybeans up 1.5 pennies here today, 10.50 even is where we settled. Lower lows, lower highs on the day, and yesterday we did spike up all the way to 10.56.5 on the upside there before closing yesterday, Tuesday, at 10.48.5. Now we're right back to 10.50. That's a nice big fat round even number. To my eye, in my experience, the markets tend to gravitate to those, around those sometimes. I'd like to see them gravitate toward a higher one. Short-term averages did flip into bullish territory here with Tuesday's trade. Got a little bit of an addition to that here today, a little lower lows and lower highs on the day here for January beans. Not exactly confidence-inspiring, but volume is very, very high today on a positive update. I think that usually leads to more buying, at least in my opinion it does. December soy meal, very strong day for soy meal anyway. Up $3.10, $2.90 even is where it settled. That market's been working its way up here, made its low here October 1st, rallied up for a couple of days, pulled back some, did not set new lows, and now we've been up 1, 2, 3, 4, 5, 6 days in a row, clearing trend line resistance. We haven't done that in soy meal here. Well, ever since that trend line's been put on there, and that's drawn across the highs that we had here in February to the highs that we had here in June. We're clearing up above that, also clearing up above the 100-day average. We haven't traded above that day average here since early March. So I do like this from the long side. Seasonally, soy meal is the market that tends to lead all of these. Higher usually get a little bit better gains in soy meal than you do in soybeans, corn, or bean oil this time of year, so I would expect that seasonality to continue. Volume's been increasing the last few days. Tells me that there's new buyers coming in there. The market's getting a little bit overbought. Stochastics are pretty high, 97 and 96 respectively is where my readings are, but you also have the MACD hooking up, pointing towards some higher prices here as well. I expect soy meal from here probably got another $10 higher up to that 200-day moving average. That's at $300.20 here today. That's the next reasonable spot that I would expect resistance. The previous high that we had was $300.10 here on August 14th. Would expect them to go up, at least challenge that high, if not break through to the upside. Soy meal market looks fairly strong to my eye. December soybean oil down 58 here today. It's been choppy with a little bit of an uptrend here since about September 23rd. Not really having much momentum behind it. Can't really rally up a whole lot. Has not yet been able to sell off a whole lot. Today's trade's not particularly friendly. Short-term averages have been very whipsawy, very choppy here over the last couple of weeks. 50-day moving average held as resistance here last week when we ran into it here on Thursday. And you do have the 50 and the 100-day averages making a bearish crossover here. That's something to be aware of. That's usually a warning sign that the market wants to stay weak. You got the 200-day moving average, might be some support here, 49.25. I'm not exceptionally bearish here on soy meal or bean oil, nor bullish here at the moment. I think it's kind of been stuck in a range for the past little bit here, and I would expect them either to test the high end of it right around that 52.85 or so area, maybe even more likely it seems now the downside of it here at 46.88. Chicago wheat up 3.5 cents here today. Market hasn't turned bullish, but at least for the moment anyway, since last Tuesday, it's stopped going down. Short-term averages, 5-10-day did make a bullish crossover with yesterday's trade here on Tuesday. And that day we were down a little bit, down 4.5, but they gained some of that back. Not exactly a resounding rally here. And you still have an equilibrium day that we posted here on Monday in the market. You did get a bearish directional close yesterday following that doji. That's not real bullish in my opinion, but the fact that the market has lost momentum to the downside for the moment, I'll take what little victory we can get there. Stochastics are trending higher. MACD is also hooking up here as well. Wheat is long overdue for a rally. See if we can get one going here. KC wheat up 3.5 cents here today, 488.5. Bearish day here yesterday. Actually, bearish week here for it. We were down 1.50 on Monday, down a nickel here on Tuesday. Today we're only up 3.5, but we're still off the lows that we set here last Tuesday, the 14th. And until we start setting new lows, I'll take that as a small victory here for the bulls. Short-term averages did flip to the bullish side here with Monday's trade. Not necessarily a sign of a huge trend change just yet until we can get the market back up there. And that moving average crossover happened right around that 489 3/8 level. Closing 488.5, we're not far away from that. Wouldn't take much to turn this market back around. But the wheat market's going to need a little bit better story. Switching over to the soft markets here. December cotton today. Getting a little whipsaw. You had short-term average. Well, you had an equilibrium day here on Monday. We opened and closed almost at the same price, just one tick apart. The bulls had a chance to push it higher, and they tried, but they couldn't hold it. Bears had a chance to push it lower. They couldn't quite do that. Everybody kind of came back to where we started. Did have a lower lows and lower highs yesterday here in cocoa market, but finished the day up. Today, big down day here, 77 lower in cotton, 77 lower here at 63.65. Short-term averages did make that crossover yesterday, but trade activity today suggests perhaps more weakness is coming because you're getting a bearish directional close outside of Monday's doji equilibrium day kind of a range. So I don't know. I don't see anything real positive here for the cotton market at the moment, even though the short-term averages are on the bullish side. I think there's a little bit more pressure here still ahead. Sugar futures, March of next year, 15.13 today, down another 11 ticks, setting new contract lows here for the move. And this market, I'll scroll out on the chart here a little bit. It's been trending lower here. Well, where are those highs? It's been trending lower here ever since we made our high back in December of 2023. So you're working on what? Almost 2 years of downward trend here in the sugar market. Doesn't seem like it really wants to abate. The seasonal rally that I would normally expected to show up this time of year didn't really materialize. Things did tick a little bit higher, but not a whole lot. Everything's still pointing toward weak sugar prices. Looks like we're going to have a bit of an oversupply here this year, with good crops coming out of Brazil and hopefully India as well, due to the monsoons. Flipping over to the coffee market, new contract high close in coffee here today. December contract gaining 1040 on the day. 423.95 is where we finished. Short-term averages have been on the bullish side here since October 14th. This market is relatively volatile compared to some of the other commodity markets out there. It tends to make big moves here without any real warning. Earlier today, it looked like we were going to have a spike high and another repeat of the day that we saw here on October 15th, where we ended up lower. But nope, the buyers stepped right back in. Tells me that there's still more buying interest in the market. Volume is pretty good today, the highest it's been here in about 5 days, so that's a pretty good sign, and it's the highest we've had since that big spike high and the down day on October 15th. I do like this coffee market here from the long side. Looks to my eye like it wants to continue to go higher, especially setting new contract highs here today. December cocoa futures, 410 higher today. Big move up. 63.26 is where they finished. That's the strongest close in the cocoa market here since October 2nd. 5 10-day moving averages making a bullish crossover today, and I'm keep harping on these here, but you had another directional close. You had a doji and equilibrium day here on Monday where the market opened and closed again just one tick apart, and you're getting a bullish confirmation here today. Tells me the market might want to push back up toward that 7,000 area. Certainly would expect it to trade higher here and check those July lows, and that's right around 6,700. Today's close at 63.26, so you got at least perhaps another 400 points higher here in cocoa. If not, I'll move all the way up to that 7,000 mark. So yeah, cocoa, short-term averages hooking over to the buy side, stochastics pointing higher. I like cocoa for short-term, long side trade. Gold market and the metal markets have had some interesting days here in the last few. We made new highs, and markets stayed very, very strong. Which day did we make the high? 43.98 here on Monday. 43.92 on Friday of last week. So we made the high on Monday of this week. Big bearish engulfment here yesterday. Big bearish move down. Huge move, $250 lower plus for the gold market. Pushed it below the 5 and 10-day moving averages. At these high prices, I think the volatility picks up a little bit. Gold did trade down and touch into that trend line support, and this is off the lows that we had here in August to the lows we had in September. Did hold trend line support there and bounce up away from that. I think that's somewhat supportive. You still have a red day though, and even though we were down $250 yesterday, wasn't the highest volume day we had. That was last Friday, where you had a big bearish engulfment of profit taking. So you've had two very large bearish engulfments here over the last 4 trading days, 5 if you really want to go that far. I don't think that's very, very supportive here from a technical point of view, but the gold market continues to trend higher. And what's been working, you get a couple of days down, and the market turns right back up. You get a couple of days down here in September, obviously not as big as the ones we've had here this week. Hits trendline support, turns right back up again. We did have this long consolidation period here through April, and that extended here into August, but we've broken out of that here, and I think this is just a profit-taking retracement when all is said and done. December silver up 49.5 here today. After having a $3.68 move here low on Tuesday and a $3.19 low here last Friday. Also bouncing off of trendline support. We're below the 5 and 10-day moving averages, but they haven't made a bearish crossover yet. And just like gold, I mean, this market has been in an uptrend here, very substantial one, and we are making big highs here. The highs that we made here on Friday, 53.76. That was a new all-time high for silver. It makes sense that we'd see some profit taking after that. Look for this market to get back up above $50 here. Trendline support is holding. If it does get weak, maybe the 50-day moving average here at 43.98, we'll call that 44 even, should offer us some support there. Copper market here, it's up about 4.5 cents here today. It's been right along this 100-day moving average, just holding right along it here since October 10th. So we've had, 10, 12 days on the calendar here, just sideways activity here in copper. If they really wanted to crack it back, they could. I think that 100-day support is holding. That 100-day average here is at 495.56 or so here today. 200 days even just below that here at 486.30. Yeah, I think this market's got a little bit of upside to it. I think the recent volatility here in the gold and the silver has kind of got metal traders a little bit nervous. U.S. dollar index, well, it's been ticking higher up in all week up until today. It's down 7 on the day here at 98.69. This market is really, to my eye, been stuck in the range here since April of this year. And I don't see it really breaking out of that trading range here just yet. We're up toward the high end of it. Should be a reasonable spot to look and expect this market to trade back down toward that 95, 96 or so level. Not a whole lot of direction to the U.S. dollar. Treasury bond market, 30-year bonds are up 4 here today, 119.10. Got an equilibrium day here. This is right where we opened the session here last night. Don't have a settlement yet. That'll be done, or market will close here in another 23 minutes or so. But market seems to be running out of steam. There is a Fed meeting here next week. The Chairman Powell has all but telegraphed that there will be a quarter-point cut. Some folks are trying to factor in that maybe we're going to get a half a point or another quarter point here by the end of the year. But yeah, I do expect the Fed to cut rates next week. When rates go down, bond prices go up, and I think this rally has been in anticipation of that. This might be a typical buy the rumor. Once we get confirmation here with next Wednesday, might see the market turn back lower here. Equilibrium day to day, even though you got higher highs, higher lows, market might be running out of steam here a little bit in the bond market. 10-year notes, same kind of thing. Not really as bullish here as the 30-year bond has been, but expecting a rate cut next week. And yeah, that might be a profit taking or an opportunity for the market to turn and head lower there. Switching over toward the stock indexes. Got earnings season coming out here today. I haven't had time yet to see what the afternoon earnings have resulted in. Got the S&P futures down about 37 or so on the day, 38 lower, trading around 67.35. Short-term averages are on the bullish side here, but we might get some negative earnings or surprising earnings that make everybody bearish. And stocks are in need of a correction. We really haven't had much of one since, well, Friday, October 10th, when the market dropped about 184. 50-day moving average support has been holding. It'll be interesting to see if stock index futures can push up to new highs, get us a nice little Halloween, Thanksgiving, Christmas type of rally. NASDAQ futures are down about 252 here today. Short-term averages are on the bullish side. 50-day moving average support did hold here over the last week and a half. That tells me the market does want to go higher. We just need a stronger push and maybe some good earnings from some of these, the alphabet stocks and the FANG numbers that people want. Dow futures are down about 447. They're trading on their lows of the day here right now, or very close to them. We're at 46,688 right now, down 447. The low of the day has been 46,640. So we're not bouncing very much. Not exactly selling off a whole lot. Yesterday's close in the Dow was a contract high close here for it. Earnings season's going on. Short-term averages are on the positive side, and 50-day moving average support held here in the Dow over the last 10 days, just like it did here early in August. So I still like the stock market here from the long side. Broader market, the Russell Index down about 36 or so here at the moment. Chart doesn't look as pretty or as nice as the other stock indexes to my eye, but that 50-day moving average did hold there as well. Got a little close to it here today. Had a little bit of a downward push on Friday, but every time we get down there, the broader market keeps getting bought. Tells me that there's still bullish folks out there in the stock market. And finishing up with the energies here this afternoon. Crude oil's making a very sharp jump here. It's up about $2 after trending lower here for, well, most of the month of October. Did make a nice little hammer spike low here on Monday. The market spiked down to set new lows for the move. Got down near the lows that we had here in May. So we're basically making 5-month lows here earlier this week. Some of this move is profit taking. Some of the move is from later in the day. Today we also got an unexpected draw here on our crude stocks. I think the market was looking for a build again after 3 consecutive weeks of build, and we got a draw this week. So stocks declined a little bit, not what the market was expecting. Seeing crude bounce up, expecting resistance to my eye right around that $60, $50, $61 area. Don't think there's a whole lot to be bullish about crude oil. Unleaded gas here up a nickel today. Had an equilibrium day here yesterday, made a spike low last Friday. Also a decline in production there, kind of a surprise. And the market did bounce up pretty good. Now, short or longer term average, you got the 50, the 100, and the 200 here in gasoline, all kind of clustered between 185.40 and 186.11. I do think this market wants to maybe trade up and hit that resistance. We're also kind of at the lows that we had here in August as well. Might be a little bit of resistance there. Gasoline prices might bounce a little bit, but I don't think they're going to be enough to make everybody have too much pain at the gas pump. Diesel prices, sharp jump here today, 3.5% higher. That's a little bit more percentage-wise than the crude have made. Getting right back toward that 50, toward that 100-day moving average. Both of those are right around that 225.77 to 226.11. Right now we're 226.19. Up almost 8 cents here on the day, 7.7 cents on the day, up 3.5%. Big jump there. And again, with diesel prices now, keep in mind this is also heating oil for the folks on the East Coast. So if the weather forecasts get cold, we could see diesel prices continue to firm up, but I don't expect that here at the moment. And finally, finishing off with nat gas. Finished last week pretty strong. Friday we were up about 10 cents. Monday, a huge jump up. Gapped higher with the Sunday night trade. Left a really big hole down there to 374.80. Some point in time we will go back and finish that. Been working our way higher here all week. Monday we were up 29.5 cents almost. Yesterday up another nickel. Today you got higher highs, higher lows. And the market, it's down a little bit here, down about 32 or so here on the day. Might be running out of resistance, running out of steam, because you do see that 100-day moving average kind of coming in as resistance. Market's not really interacted with that at all since late June, or even mid-June, if you will. And at that point, it became substantial resistance, and the market's been trending lower here ever since. Winter is coming. That might give us an unexpected pop here in natural gas prices, but it's not here yet, folks. Volume's been high the last couple of days. Everybody got all excited, saw some short covering here on Monday, extended that here a little bit yesterday. Well, we'll see if they can continue the strength here in nat gas. I do appreciate you guys sticking around. If you've made it this long through the whole thing, thank you so much. Remember to please like this, share this, subscribe to it so you get updates when I put up new videos. I will talk to you guys here in this space next week. Thank you.